So there's not necessarily a hard and fast end caps for the credit score requirements. The credit file overall is what is being underwritten because VA really doesn't set credit score thresholds. Now, different lenders have different credit score thresholds, but as a whole, VA does not. And so, looking at what's called compensating factors. So, it's like any other borrower. We're looking at the service member or the veteran, and we're looking at what is the ability to repay. And maybe they've had a time in life that was a hardship and it affected their credit score negatively. For instance, I had a borrower years and years ago that had just went through divorce and a bankruptcy. So his score was super low, but income was great. His debt to income ratio was great. His reserves, his savings was great. It was just the score. And so we were able to get that approved and I did a couple of refinances for him while we got his score approved. So again, it looks at the whole health of the credit file from the borrower. VA does have one different aspect, which is they look at residual income. Residual income is what is left over for utilities after your monthly expenses are paid. And again, the goal is to help our veterans have home ownership and keep home ownership, not just put them into a situation where they're going to be hand strapped on making a mortgage payment every month. And I love that because we don't want anyone to be house poor. We want them to build wealth through home equity, but we don't want people to work just to make a mortgage payment. The VA loan has that extra kind of residual income aspect to it, which at the end of the day is quite the benefit for our veterans because we're setting them up for success versus failure.